Let's go. We are live. What is going on? It is Friday, September 27th, 2024. And I am your boy, Dave Bergio. I'm here flying solo today on Financial Fitness Friday. My co host, Mr. Jonathan Federa, couldn't be here today. He's a Floridian, although I believe he's in New York. So, good thing that for him and his family, but also, I want to shout out to everybody in Florida and in the South. Uh, my prayers to you all, making sure you're safe as this hurricane hit. Those of you that are close to me, Renan, Mike, Jonathan, Kyle, Bill, all you guys down in the South there. I know you all are all right, but that doesn't mean the rest of the world is. So shout out to you all, man. Hope everybody's doing well. So, guys, what do I want to talk about today? And what we got here? I'm on multiple platforms here today, man. So this is going to be pretty cool. I got TikTok over here. I'm on the StreamYard. I got my personal Facebook. I got Trifecta's YouTube running this. I got LinkedIn running this. So I'm coming everywhere. So if I'm off screen in different spots, don't mind me. I got different cameras looking at me. But guys, something I've been talking about a lot recently, just in general. So those of you that don't know, and I'm going to shift gears here a little bit, on Financial Fitness Friday, I've been doing a live every single day in TikTok. It's been a cool experience. It's been really cool to kind of engage and inform and educate on that platform. So if that's something that you go on, I do it. I do it actually around this time every day. I do it 2 o'clock Eastern. If you want to find out more about that or hop in, just go to my TikTok account. It's Dave.Bergio. Look me up. You'll see it religiously every day, Monday through Friday, between 2 and 2:30. I'm on that. Who's this on here? Tanner Vit 007. Sorry, not today. Not gonna do it today. But I do appreciate it here. Let me say hi over here. Let me say hi. Hope y'all are doing well, right? What's up, Long Man? What's up, Jamal? What's up, y'all? All right, so cool. So back focus on here. What's up, Face Space, LinkedIn, YouTube? And we got everybody everywhere. But one of the important things is the pointing over here on my one camera, right? Credit utilization, right? I want to dive deep into that. And one of the discussions I want to have about credit utilization is why it's super important. Look, the most important thing is obviously payment history, right? Pay your bills on time. But I want to talk about credit utilization because that's a huge controllable that I think people miss. I had this conversation with I forget exactly who, somebody during in the afternoon yesterday. We were talking about that. We were talking about the rebuilding process, right? To where you're creating new accounts, but if you're showing payment history, which is good, you're getting some activity on the card. But as you're building that over time on there, if you're letting balances kind of accumulate, you're just making small payments, which you shouldn't do anyway, or as opposed to not paying before the statement date closes or getting into the due date billing cycle, how that can have an effect as well. But also, I was speaking with a business owner last night, and he's looking at very well established business owner, you know, had something screwy happen with something or other with a banking issue, something that definitely could be rectified and fixed. But the problem with that and with him was, hey, like this thing kind of screwed me up. Like, what's the worst thing that can happen to me if I don't get fixed? And I said, well, look, like it could take some time, to rebound or become lendable because it's, if you inadvertently miss a payment, that's going to affect you in some manner, right? Think of it this way, right? On this late payment side, it's like going up to somebody or anybody that you don't know, you have no relationship, you don't know them, they don't know you, there's no there's no trust. So it's, hey, can I borrow money? Well, hey man, you were just late. Like, you look risky. Like, you're not going to pay me back. I'm not going to let you borrow money and then pay me back. So you're going to have to kind of quote unquote rebuild that trust, right? With getting some of these payments back in and building some of that payment history again. Usually takes 6 months, but say even after that, like, what's the one biggest thing that you could control is your credit utilization on credit cards. That's a big deal. That's 30% of your score. That is 165 points, right? So that's a big deal. Hold on, let me grab something here real quick. I got something hiding on here. I want to grab it. I don't know if I could do this on StreamYard or not. Not sure if I can add this. Let me see. Will it let me do it? Will it let me? Will it let me? Nah, it won't. Well, that's not going to work. But anyway, no big deal. So, guys, I want to touch why the whole credit card utilization portion, that 30% being on your credit report, is probably it's the most important thing because it's something that you can control all the time. But I also think it's also the most misunderstood because a lot of times if you're paying things or paying bills in full every single month, but it's getting reported on a credit report after the statement date goes through the billing cycle because technically you owe it. And that report's always going to be a month behind. So just knowing how these things work and the importance of them, these are tools that you take with you, you'll have forever. The credit score impact, which I'm talking about, obviously it's super, super, super important, right? That utilization rate, it's significant, right? So as I stated before, it's 30% of your overall FICO score. It's basically calculated by dividing your credit card balances by your available credit limit across all your cards, right? So if you have 10 cards, right, say they're $1,000 a piece, that's $10,000 in limits. If you have $3,000 total within any one of those 10 outstanding or closed statement as a balance, okay, what is that? That's 30% utilization. Therefore, your score is probably going to go down. Let's see, 30%, 165 points. It'll probably go down at least 50 points, right? Sometimes more, depending on other things that are reported and other factors. Okay. So just knowing that, that's huge. But what else is important about that available credit limit across all your cards? Well, if you're going for funding, especially in a mortgage, like, don't look at them individually. Okay. Do you have accounts that on an individual basis are extended out that you owe a lot of money on, correct? Right? They're going to look at that and be like, man, you got a lot of cards. Like, oh, you have some over here that you're not using, but you're really extended on some of these cards over here. And it looks like, just on the history, it's been that way for a while. These are getting higher and higher and higher. Your risk assessment looks a lot higher to us than what it should be. So keep that in mind, right? As I just stated, right? Lower utilization equals higher scores. What does revolving credit mean? And again, look, those of you that are hopping on these, I'm flipping back and forth. I got multiple camera angles. I'm on multiple platforms today. So lower utilization, right, equals higher scores. What does revolving credit mean? What's a revolving trade line mean? It means for every dollar you borrow, okay, you're essentially giving yourself a brand new loan without ever having to go through the underwriting process ever again. As long as that account is open, it's in good standing, you have the available credit, okay, and the company still exists, it doesn't go under. So, which means you have that over and over and over and forever, as long as those things that I just mentioned are still in line, right? And that's one of the reasons why it's weighted so heavily. The other reason is it's all unsecured debt. What does that mean? It means that there's nothing backing it up. That's why rates, even though they're ridiculously high on credit cards, but that's why interest rates are typically high on a credit card to begin with, because there's nothing backing it up. So you're essentially, quote unquote, taking a loan without backing anything up. Well, take a car note, for example. That's a secured loan. Well, what's secured? Okay. You have the auto loan that's secured. You have a mortgage backed up. Well, what's up with what makes a mortgage secured? Well, the property that's secured. Credit cards, there's nothing secured about a credit card. Okay. You're just swiping away. Let's see. I got my whole list here. Responsible credit use, right? it shows that, again, because a lot of this stuff is unsecured, right? They do make secured cards. I'm sure I'll get somebody that'll try, oh, you can get a secured card, man, put money on it. Sure. Yeah. What? A couple $100? Are you going to go out of your way and put high limits on there? A lot of this stuff I speak on higher limits. If you're going to get a secured card, are you going to put $1,000 of your own money? Oh, you want a higher limit? Are you going to put 5,000 of your own money? Most people, here's the statistic, most people live paycheck to paycheck. So if they don't have a couple $100 saved, how are they going to have a high secured limit? It's just not going to happen. Perception of risk, right? So risk assessment. So all lenders will view borrowers with lower credit utilization as more stable, right? They're more financially stable and they're very responsible. Okay. Just talking about this utilization factor before, it will signal to financial companies, right? A distress, or people do rely on credit, which increases your perceived risk as a borrower. So remember what I just said. If you're going back over history, right? If you don't have certain cards that you use, say it could be a store card or something else, but if you're using an everyday Visa, MasterCard, Discover, Amex, right? And you have over time it increasing, well, again, that's a risk factor. It's looking very risky. Is 736 a good credit score? Official Charleston Chew. That's such a great candy, by the way. Yes, it is a good credit score. It is anything typically over 700 is good. 720 to 740 is very good. 740, 760, it depends who you ask, above is exceptional, is very, very good. So yes, it is. Let me backtrack here. We got anything else on here? And y'all got me in all kinds of directions today. Looking who's on here. Awesome. Let's see. Let's check over here. We got nothing, right? Uh, all right. What else do we want to talk about? This responsible credit use, credit limit increases, right? So now, if you have low utilization and responsible behavior, a lot of these credit card companies, they'll offer you credit limit increases just out of the blue, or you can also request them. But keep in mind, you could have a hard inquiry, a hard pull on your credit report. Some companies will do a soft pull. It's not a big deal, but make sure you look into that first. Because if you have a lot of inquiries sitting on your credit report now, it might not be a good idea to do that just from that factor alone. If they're offering a soft inquiry for it, then sure, it would be. Jamal, please read my comment. Please read. Where's your comment, man? I don't see it. I don't see it. Please read my comment. I don't know where it is, Jamal. Got to send it to me again, man. Send it again. I'll see it on here. What do you do if an existing credit card made a hard pull? Well, if you haven't, and that's from Renan. Well, if you got an existing credit card and a hard pull, so typically that's a new account, right? Or again, as I just mentioned, if it's an existing account and you're requesting and they did a hard pull, the answer is nothing. Like, don't do anything. And the reason being is you have a card. Wait a minute, who's this on here? Nah, bro, not today. Not today. Not today, buddy. So the reason being is, what do you do with that? You don't do anything. And the reason is you risk closing that account. That's an open account. You try to dispute that inquiry. Inquiry is typically or technically the first line of defense on a credit report, right? You're pulling a report, you have social security number, they're checking your report. The credit bureaus want to make sure it's legitimate. So if you're poking that bear on inquiries that are on there for open accounts, it's going to go back to that company, to the original creditor, and they're going to look at it as, hmm, that doesn't could this be fraud? Like, what's going on here? Why are they disputing this inquiry? And you risk them shutting the account down right away. So now if you have an older account, if it's aged, if it has great payment history, you have a high limit, no usage, that gets shut down, you're probably going to lose a hefty amount of points. So hope that answers your question there, Mr. Renan. Primal G, what do we got? I have a clean 760 with 2 cards. Why are the 15,000 loans available 23 to 28%? Hmm. If I have a clean 760 with two cards, why are the only 15,000? Are you talking a personal loan or are you talking credit cards that have that high percentage? Hmm, that's interesting. Primal G, send me a DM on that. I'd like to hear some more specifics. Personal loan. I don't know. Maybe you're going to the wrong institution. I mean, look, rates are high right now anyway. If you're a good loan rate on a personal loan, you're probably looking anywhere 8% to 13%, depending on the institution. Just look around. I will say this, don't get caught into doing too many inquiries. Look around first, see if there's a company that will just do a soft pull assessment. I actually have a guy that if you're looking for a $15,000 loan, I might have somebody I could send you to that will soft pull you. They're a brokerage. Don't look around. You're not committed to anything. So if you need help with that, send me a message. All right. I'll help you out with that. I tried to dispute it. It wasn't successful. Well, it depends. What did you say? There's different ways that you could dispute it. Is it closed? What are you disputing? Are you disputing an inquiry? I mean, that's the real question. If we're talking about the inquiries here, you know, just because, and the same thing we do, it's not just one time. And this is where if you guys are trying to fix your credit on your own here, and I love this engagement because we're going everywhere here. But if you're trying to fix this on your own, um, it's never one time. And this is why it takes so long. It's a cat and mouse game. And how did you do it? Did you make a phone call? Did you send a letter in? Did you send it direct to the bureaus? Did you send it to the creditor? Right? Did you file a CFPB complaint? There's 101 ways, quote unquote, to say skin a cat. So how did you do that? And again, if you got stonewalled, it's one of those things, and we do this for our clients. It's look, you do it over and over again until you get the results. And that's the same thing in anything that you're disputing, whether it's errors, no matter what it is. Okay. It's a systematic approach. Okay. Number one, is it mine? Okay. They came back. Well, they said it's mine. Okay. Well, how do you prove it's mine? Hey, look, this inquiry was open without my authorization. What is on here that shows that you could even open this? So you just keep creating that paper trail, asking back and forth. If it's letters, if it's something else, call them directly, call the bureaus. I will say this, you could take some time getting on hold, but call them and say, hey, look, this is an inquiry. I didn't authorize it. What are we doing here? Like get it out of here. But if they don't do their job, keep doing it over and over again. Especially if you should do it by letters. So if you have the letters and if you can't get through and get it removed, then file a CFPB complaint. Look, I've sent multiple letters in. This isn't mine. I didn't authorize this. Okay. If it's not yours, full disclosure. So now it's why is this still on here? The bureaus have been reached out so many times. They're not doing their job. And now I'm filing a formal complaint. Here's all the letters I sent. Send them certified too. So you got a paper trail and just do it that way. Sometimes it's not going to happen in one time. And I think that's the biggest misconception when you're working with negative items, that it's not going to be the first time. A lot of the time, it might take, this is why it takes a few months, but don't give up. Keep going. Too many inquiries can also get you denied, even if you have a 700 plus. Yeah, absolutely, man. Absolutely. 100%. Chase has this unwritten rule called the 524 rule. So, those of you that don't know, inquiries typically last for 2 years. Well, not typically, they do. They last for 2 years on a personal credit report. Um, then they'll fall off. So what does 524 mean? Well, the 24 is for 24 months. So that will be on there for 2 years. And the five means five or more inquiries. Chase typically checks Experian. Sometimes they'll do Experian and TransUnion together, especially on their business cards. But and they say they don't do it, but I've had tons of people I know, and including myself or in the industry, seeing other people. The moment they have five inquiries on there, I have a lot of real estate investor friends too. Coming on here, boom, denied. Well, how do I get denied if my score's in the 800s? That doesn't make sense. So it's kind of an unwritten rule that they have. So if you have more than five inquiries within that 2 year period, you're gonna get denied. Let's keep going here. Credit limit increases. Yeah, that's where the whole inquiry thing talked about, but better offers too. Okay. When you start having lower utilization, even as you add more accounts on here, you're going to start getting better offers. Man, I love this. This is awesome today. I'm on Facebook, I'm on LinkedIn, I'm on YouTube Live over here, and I got TikTok Live over here. This is what it's all about, man. We're having fun with this. Let's keep going. We've been going for almost 20 minutes strong over here. All right. All right, so that's the one thing. And by the way, this is my top 5 today. You avoid to avoid high interest charges. Look, let's keep it real here. Credit cards are the worst, man. Like when it comes to interest, I explained why interest rates are high, either based on your credit. The interest is still going to be high regardless, even if you have high credit. So now, or if you have good credit, the interest is still going to be high. Look, great credit on a credit card right now, you're still going to push 15 to 20%. Okay. Who wants to get caught up in that? And then the compounding interest, if you do new purchases all the time, you're creating new bills every single month, and then you're compounding the interest on the other side. It's a recipe for disaster. Okay. But to helping you avoid that, this is why you pay that in full. This is why you get that credit utilization down. And the interest also affects the credit utilization as well. And I think people forget that sometimes. Well, just because it's not a purchase, well, now you have this interest added up. It's part of your utilization. Okay. So you're adding that down. Therefore, you're driving your credit score down even more. Where's on my list here? What do we got here? Yeah, pay him early. Yeah, you're right about that. Absolutely pay him early. So the power of paying early. I stated this before about paying early. When you pay, and paying early means paying it before the statement date closes. So if you have that billing cycle that closes, say today, right? Say you had a billing cycle that closed today, September 27th, and it's due in another 21 days or something, which would be, I don't know, October 22nd. That sound about right? Think it's 25. Yeah, 25 days, October 22nd. So that's the due date cycle that it's in there now. All right. So when you let that statement date close, it's going to get reported to the credit bureaus as a balance because technically it is, even though you know you're going to pay it in full. So it's going to make it look like you're losing points, your score's going down because you have that open balance. And people get that confused all the time. How do you avoid that? Pay before the statement date closes. So if my statement were to close today, close it about 10 days ahead of time. Pay it off on September 17th. Okay. Get that zeroed out as soon as possible. Flexibility in financial emergencies, right? So keeping your utilization low. This is the importance also of getting multiple credit cards with high limits. I tell everybody over time you should shoot for at least 6 figures of personal credit cards. I'm not even talking business cards, business credit cards. It's not even the subject today. But in terms of personal credit cards, you should have 6 figures. It's not going to happen overnight. It's going to take time. But how do you do that? Well, you do that by either getting multiple cards. Okay. You don't have to do it in one shot. You don't need 25, 30, 40. I knew a guy with 60 credit cards. It was crazy. He would cycle them every month to try to keep them open. It's like, how do you keep track of that? That is hard, right? I wouldn't even want to do that, but he did. Um, but how you really do it is you do it over time if you're starting from ground zero, right? Even if you get something small, $1,000 let they offer you. So how do you do that? You request credit limit increases or you earn them from your spending habits. And then if you do get 5 or 10 or however many credit cards and they're now 10 grand a piece or 20 grand or 25,000, right? That will put you in over 6 figures. It'll probably take you some time, might take 5 years or so, but the idea is having this flexibility now. So number one, if you do have an emergency, say a hot water heater breaks in your house and you don't have any cash laying around, but miraculously you have access to cash or money laying around for whatever reason you don't. Say it's you got a great points card or a great cash back card. Well, man, like if the HVAC guy or the plumber for that hot water heater is taking cards on site and I'm gonna get 1.5% cash back, or I'm gonna get thousands of dollars in points. I'm going to use my card instead, and then I'll just pay it off within the next couple of days. But that 10 grand, if something else happened and all of a sudden you need it on a whim, and it's only 10% of your credit utilization, your score is not going to take a big hit, even though you owe 10 grand. You see what I'm saying? So now you have buying power. You have flexibility, not only in emergencies, but if you wanted something that was an investment right away. It's how do I get? And I don't want to get too outside the box here because there's some things I can teach that are higher level stuff with 0% and this or that. But on the surface, if you need money quick, and if you have it built and established, 10 grand. All right, cool. Swipe 10 grand. It's not going to hurt you because by then, when you have aged accounts, you have high limits. From what I've seen, or even personally, you'll be well into the 800s, and 10 grand is not going to bump you. So not only do you have these extended limits, then your credit score is still super high. What else do I got on here? Just talk about that. Better loan terms, better rates, loan approval factor. Sure. At the end of the day, it's going to show you have responsibility. That's really the biggest thing, too. If you can handle 6 figures of credit cards, whether you use them or not, that shows, say you want to buy your dream home, say you want to get into real estate, say you want to get an SBA loan to start a business, right? Most of these things you're going to have to personal guarantor in some manner. Okay. A business, you're definitely going to have to personal guarantor if you're not established. I mean, look, it's your personal residence if you're buying a home, of course. But if you're becoming a real estate investor, you might create a business entity for that. You still might have to personal guarantor this stuff, meaning your personal liability, aka your personal credit, you're backing that funding if something were to happen for that particular business entity. So now, if I'm asking somebody for a loan, or even if I'm going to the SBA, and if they look at that, it's like, wow, this guy's really responsible, and he's got $120,000 in credit limits. He has less than 1% utilization. He only owes like $800, and he's probably just going to pay it off in full. Man, this guy can handle 100 grand. Yeah, we have no problem getting him that SBA loan for whatever he needs to start his business because obviously, he has money in the bank. He's got other credentials. He owns assets. That's great. Oh, that mortgage coming in. This is his first home ever. He's got down money. Oh, he can handle that. Oh, as long as he even on an FHA, puts 5% down, the closing costs are there. Oh, yeah, man. Low interest rate borrower all day, right? So you have buying power. Credit to me, it's the biggest investment you can ever use. A lot of people think credit's bad. It's bad if you use it the wrong way. And I don't want to get too outside of the box and outside of this crazy rabbit hole, but you get me fired up, man. I'll start getting passionate and staying off course here. But that this is why the whole utilization factor is super important. And the last thing I stated, I said this earlier, the statement date. The reason why that's important, and this is a conversation I had with that same person in the afternoon earlier in the day. I said, look, create some payment history, let it cycle through, let it billing cycle, let it close out, pay it off in full. You're going to do that payment history, right? I said, continue to do that. And the reason being is, you want to show good on that credit on your credit score. You want to have those okay payments or pay on time within those quote unquote 30 days. Keep doing that strategy. But I said, look, at some point, zero it out. Either don't use it for a month or pay it before the statement closes. He said, well, why do I want to do that? I said, see what it looks like when it's zeroed out. And mind you, he's starting with a very small limit on a secured card. It's $500. So if he spends $100, he's going to be in the hole for basically, what did he tell me? He's like, yeah, gas, some other things that I need to build to build some things that he's doing for his business. And that's a problem. He has nothing he could leverage to even get on the business credit side yet. But he's spending about like $250 a month. So he's already at 50%. So when you're at 50% utilization for $500, you're going to take a big hit quickly. and on your credit score, because it doesn't matter. It's that 50% number. So I said, look, pay it off before the statement date. See what happens when it's zeroed out, and see what your credit score jumps. I said it's 30% of your credit score. It's 165 points. See what happens when you get that point value. Yeah, it's your only card, but at least we have a benchmark to see where you are. So if there's other things that need to be fixed, some other negativity. Okay, what's the end goal then? So if you do need to make more purchases or whatever, and if your score does dip, then you know why. Then you understand it. Okay. Then you understand more. But that's the reason being, pay before the statement date instead of getting in the due date cycle. Well, it's $250 and then my score just dropped, almost 100 points. Well, yeah, dude, it did. So keep that in mind. Guys, I wanted to come on here. I wanted to drop this to y'all real quick. Hope you guys got value. Man, I've been on here 30 minutes. It's crazy. I'm gonna have to shut it down, but I appreciate every single one of you coming on, asking questions. I appreciate it, man. This is a new thing for me on TikTok in general. The other platforms, I've been doing this a long time. Jonathan and I usually wrap this out for 10 minutes, but like I said, I've been on for 30 minutes today because I love this, man. I really do. I love rapping, about credit. I love rapping with you guys. I love teaching this in general. Check me out. Like I said, every day, Monday through Friday, I come on here. Those of you that don't know me, I'm Dave Bergio. I'm one of the founders and CEO of Trifecta Credit Solutions here in Allentown, Pennsylvania, representing. Other than that, I hope I'm not aging myself by talking like that, but whatever. But other than that, guys, be great. God bless you all. God bless you to those of you that are in the South. Stay safe down there out of this hurricane. Have a great weekend, and I'll see you next time. Be great, y'all.